Welcome to our deep dive today. We are looking into the financial performance of Hindustan Aeronautics Limited, HAL, as most people know them. And we're going straight to the source. Their official filing to the Bombay Stock Exchange and the National Stock Exchange India, dated November 14th, 2024. So these are their audited results, covering the quarter and the half year, ending in September 30th, 2024.
Yeah, it's always interesting to kind of look under the hood of a company like HAL. You know, they're a major player in the Indian aerospace and defense industry.
Absolutely. So let's start with those top-line figures, the ones that really grab those headlines. What kind of revenue did HAL pull in over these past 6 months?
So, on a standalone basis, HAL recorded total income from operations of HAFSO on 132.412 crore. And that figure shifts very slightly to 104732.379 crore when we look at the consolidated performance, which of course includes their subsidiaries and joint ventures.
So pretty much the same, whether we're looking at HAL
Mhm.
as a standalone entity or factoring in all their various ventures. What jumps out at me, though, is that both figures are quite a bit higher than their total income for the same period last year, which was 955.115 crore.
Yeah, that's a significant increase. And it suggests that HAL is experiencing strong demand for their products and services. Now, revenue is only part of the story. What really matters is the bottom line, the profit.
Right? Because the company can bring in a lot of money,
Yeah.
but still struggle if their expenses are out of control. So what does HAL's profitability picture look like?
Well, for the first half of the year, HAL reported a standalone net profit after tax of 292.595 crore. The consolidated net profit, including those subsidiaries and their joint ventures, comes in slightly higher
Okay.
at 294.763 crore.
Okay, so again, the standalone and consolidated figures are very close, but the number that really pops out to me is how much higher those profits are compared to the same period last year. Their standalone profit back then was only 204.949 crore. That's a huge jump in profitability.
It is, and it points to potential improvements in operational efficiency, or perhaps higher profit margins on their products. It's something we might uncover as we delve deeper into the report.
So for you, our listener, these numbers highlight a company that's not just performing well, but exceeding expectations. It's a signal that HAL is in a very strong financial position.
Exactly. And this kind of financial strength is essential for a company that's operating in the aerospace and defense sector, where investments in research and development, as well as the acquisition of new technologies, are crucial for staying competitive.
Makes a lot of sense. So strong financials give HAL the flexibility to innovate and adapt to the ever-evolving demands
Yes.
of this defense landscape. But of course, as with any company, the devil is in the details. To get a truly comprehensive view of HAL's performance, we need to go beyond those headline numbers and dive into the specifics.
Absolutely, because
Yeah.
those details often reveal the nuances of a company's operations and provide a richer understanding of the factors driving their success.
That's what we'll be exploring next, so stay tuned as we uncover the story behind the numbers and shed some light on what makes HAL tick. All right, so we've established that HAL is putting up some pretty impressive numbers. But as you mentioned, the real insights are often hidden within the finer points of the report. What was the first thing that caught your eye as you dug deeper into these financial statements?
One area that immediately stood out to me was employee benefit expenses. There's a pretty significant increase compared to the previous year.
Employee benefits, that covers a lot of ground. Was there anything specific driving that increase?
Well, there are actually a couple of interesting factors at play here. Back in 2017, the ministry approved a change to HAL's contribution to the pension scheme of executives, bumping it up from 7% to 10% of basic pay plus dearness allowance. And this change was retroactive, effective from January 1st, 2017.
So they had to catch up on those past contributions,
Mm-hmm.
which would certainly explain a jump in expenses.
Precisely. And that makes direct comparisons with the previous year's figures a bit more complex, as this increase isn't really a reflection of ongoing trends, but rather a one-time adjustment to align with that revised pension scheme.
That makes sense. It's important to keep that context in mind when analyzing these figures. Anything else contributing to those higher employee benefit expenses?
Yeah, there's another layer to this. Also in 2017, HAL revised the pay scales for both their executives and workmen. Now, an interpretation of that pay refixation process later led to demands for the recovery of what was deemed as excess salary paid to employees.
Wow. I imagine that didn't go over well with the employees.
You're right. Employee unions and officer associations challenged this. They filed a writ petition in the Karnataka High Court, which resulted in an interim stay on those recoveries.
So a bit of legal wrangling. added to the mix.
Indeed, and this legal battle has had a financial impact as well. HAL had to reduce salaries and wages in their books and set aside a provision for potential claims, just in case they lose the case down the line.
So for our listener, this is a reminder that financial reports aren't just about numbers. They often reflect real-world events, legal disputes, and a whole lot of complexity. It's a reminder that there's a human side to these figures.
Absolutely. Now, shifting gears a bit, there's an exceptional item of 5.89 crore listed in the report. This relates to the Bangalore Metro Rail Corporation acquiring a piece of HAL's land for their Metro Rail project. HAL received compensation for this land, which is reflected as this exceptional item.
So a bit of a one-off gain for HAL, and something they had to account for separately, as it falls outside their normal operating activities. It's fascinating how these reports can offer these little glimpses into a company's dealings
Yeah.
beyond their core business.
It certainly adds another dimension to our understanding of HAL's operations. Now, speaking of looking beyond the core business, HAL made some strategic investments during this half year, specifically in four newly incorporated Section 8 companies.
Section 8 companies, those are a bit different from your typical for-profit businesses, right?
Yeah, that's right. They're established with specific charitable objectives in mind, often focusing on research or nonprofit goals, in this case. These four companies are all dedicated to defense testing.
So while not directly generating profits, these investments clearly align with HAL's broader mission and expertise.
In the defense sector.
Exactly. Each company specializes in a different area: electronic warfare, communication, unmanned aerial systems or UAS, and advanced materials.
That's a pretty diverse range of defense technologies. It seems HAL is strategically positioning itself for the future by supporting research and development in these cutting-edge areas.
And for our listener, this is a key takeaway. HAL is just focused on the present. They're making investments that suggest a long-term vision for growth and innovation within the defense industry. It's a reminder that a company's financial performance is not just about what's happening today, but also about the steps they're taking to secure their future. So we've covered a lot of ground here: pension scheme changes, pay scale disputes, a land acquisition, and investments in defense testing. What's the next layer we need to peel back to understand HAL's overall financial picture?
Well, we've primarily focused on HAL's standalone performance, but as you know, they also have a network of joint ventures that play a role in their consolidated results. And some of these ventures are facing some challenges.
Challenges. Okay, I'm all ears. What kind of trouble are we talking about here?
Well, there's a concept in finance known as going concern. It essentially assesses whether a company has the resources to continue operating for the foreseeable future. And in this report, there are 3 joint ventures that have raised those going concern flags.
So there are concerns about the long-term viability of these ventures?
Yes, although it's important to understand that a going concern assessment is complex, and it doesn't necessarily mean a company is doomed. It simply signals that there are factors that could impact their ability to operate sustainably. Let's take a look at these 3 joint ventures, starting with Hats Off Helicopter Training Private Limited.
All right, let's break down what's happening with Hats Off and what these going concerns mean for them and for HAL. So we're diving into these joint ventures that are raising some of those going concern flags. What's the story with Hats Off Helicopter Training Private Limited? What's making their future look a bit uncertain?
Well, their financial statements show a net loss and a negative net worth, which are definitely cause for concern. For our listener, net worth essentially represents the difference between a company's assets, what they own, and their liabilities, what they owe. A negative net worth indicates that their liabilities outweigh their assets, which puts them in a pretty precarious financial position.
That does sound a bit shaky. What factors have contributed to Hats Off's financial struggles?
Well, they've been grappling with accumulated losses over time, and their current liabilities exceed their current assets, which means they don't have enough liquid assets to cover their short-term obligations. Adding to their troubles, they've also experienced delays in major project with CAE Inc., a Canadian company.
So delays, debts, and losses. A tough combination for any business to overcome. What steps has Hats Off taken to address these issues?
Well, Hats Off's management has been proactive in trying to turn things around. They've secured multi-year contracts with defense forces for increased training hours, which should boost their revenue stream. They're also exploring options with their bankers to potentially restructure their debt and improve their cash flow. Additionally, they've been diligently making payments on overdue installments for an external commercial borrowing loan. demonstrating their commitment to meeting their financial
Well, it
obligations.
sounds like they're not throwing in the towel just yet.
Yep.
They're actively working to stabilize their financial situation.
Exactly. And based on these efforts, their management believes that they can overcome these hurdles and continue operating as a going concern. Of course, it's a situation that warrants close monitoring, but there's reason to be cautiously optimistic.
Okay, so Halsoff is fighting the good fight. What about the second joint venture that's facing these going concern issues? Halbit Avionics Private Ltd.
So Halbit is in a somewhat different situation. They're dealing with a net liability, which means their total liabilities exceed their total assets. They also have a negative net current liability, indicating that their short-term liabilities are greater than their short-term assets. This raises concerns about their ability to meet their immediate financial obligations.
I can see how that would make their future a bit uncertain.
Mhm.
What's at the root of Halbit's financial difficulties?
One key factor is their dependence on a specific supplier, who is also a shareholder in the company. This kind of intertwined relationship can be problematic as it creates a vulnerability. If that supplier were to face difficulties, it could have a ripple effect on Halbit's operations and finances.
That makes sense, putting all your eggs in one basket.
However,
Hmm.
it's not all doom and gloom for Halbit. They actually have a positive cash flow, meaning they're generating more cash from their operations than they're spending. This is a positive sign, as it gives them some breathing room to address those liabilities. They've also outlined plans to mitigate that going concern uncertainty, although the specifics of those plans aren't detailed in the report.
So another wait-and-see situation. It's a reminder that these going concern assessments aren't necessarily a death knell, but rather a signal to pay close attention and see how things unfold. What about the third joint venture on this list?
So the third joint venture, Multi-Role Transport Aircraft Limited, is facing a more definitive outcome. Their board has made the decision to pursue voluntary liquidation.
Liquidation. So they're essentially shutting down the company.
That's right. This means they'll be selling off their assets, settling their debts, and distributing any remaining funds to their shareholders. It's a structured process with specific legal and financial steps involved.
So very different path for this joint venture compared to Hatsoff and Halbit, who are both actively trying to stay afloat.
Yes, each of these joint ventures really highlights the complexities of business operations and the range of outcomes that can arise. For our listener, this underscores the importance of looking beyond the consolidated financials and understanding the individual performance of the various entities that make up a company's portfolio.
It's a great reminder that a company's story is often told not just in the big numbers, but in the details of their operations, their investments, and their partnerships.
Precisely. Now taking a step back and considering everything we've learned about HL's performance, their strong standalone results, their strategic investments, and the varied performance of their joint ventures, it paints a really multifaceted picture of a company that's navigating both opportunities and challenges in a dynamic industry.
It's certainly been a fascinating deep dive into HAL's financial landscape. We've uncovered a lot of ground, from pension scheme adjustments to land acquisitions, from investments in cutting-edge technologies to the complexities of their joint ventures.
And for our listener, I think the key takeaway here is that understanding a company's financial health requires a holistic perspective. You have to look beyond the headline numbers and delve into the details to truly grasp the forces shaping their performance.
I couldn't agree more. It's been a pleasure exploring these financial statements with you and shedding some light on what makes HAL tick.
The pleasure was all mine. Always happy to unpack the intricacies of the financial world.
And to our listener, we encourage you to continue your own exploration of HAL and the broader aerospace and defense industry. There's always more to discover. Thanks for joining us on this deep dive in